Good morning, traders. It is Tuesday, August 23rd. We are about an hour before the open, and today I'm going to answer the age-old question, how do I enter a day trade? But before we get to that, I always like to review our previous pick so that you can see how well the system works. Our previous pick was LOW. Love this earnings reaction here. Had broken through horizontal resistance. You can see earnings before the open there. It is bumping up against the 200-day moving average. Typically, on a nice big move higher like that, we're going to see a little bit of profit taking, and it's going to take time for that stock to digest the news. However, we've seen some pretty heavy selling the last 2 days in the market. Look at how well the stock has been able to hold up. So we wanted to sell an out of the money bullish put spread. I'm just dipping my toe into the water because, as you know from my previous video, I said the market is going to be pulling back. We've had a 12% run in a month. We're going to see some profit taking at the 200-day moving average. So just as we saw profit taking in LOW, we're seeing some profit taking in the S&P 500 as well. So we're waiting for this pullback in the market. We want to continue to sell out of the money bullish put spreads. Now that we know there's a little bit of selling, let's see how far down it goes. But hey, Pete, you got this LOW trade on. What do you do with it? We sold the 205, 200 bullish put spread. The expiration, I believe, was September 16th on that. So we've got plenty of time for the stock to find support. I'm going to be leaning on the opening of this long long green candle right here where I've got the line drawn, and that's approximately the 205 level. So if I come in yesterday and I go, oh my God, the S&P futures are down 60 points. I got to buy this thing back in. I'm on the wrong side of the market. When I put on a bullish put spread or any longer term swing trade, I'm really in it for the long haul, and I want to give it the day to move around. So I'm not going to act hastily on the open and reel this thing back in. So I want to keep this video moving, but if you took a look at LOW, there's the opening right there. So if I bailed on that position right on the open, I'm not too happy about it. And folks, yesterday, the S&P futures were down over 80 points. Holy cow. Look what this stock did. It was barely down on the day. It finished above its low of the day. The S&P 500 closed on its low of the day. That is relative strength. That's why we like the stock. Tick, tick, tick. Every day we've got time premium eroding that position and working in our favor. So let's take a look at that daily chart. That's how I would manage it. This video came out last week. I had two picks for you, one bullish, one bearish, because we were right up here. I knew that there was a chance the market might crack down. So I also gave you a bearish pick. And what a great one it was. Upward sloping trend line, breach to the downside. Did not add any caveats to this. I just said this is a good short position that you can take. Breakdown through horizontal support. This stock has fallen about $5 on a $30 stock in the last few days on heavy volume. Gorgeous pick. Weak relative to the market. Technical breakdowns below the major moving averages. Negative reaction to earnings. These are all the things that we look for, all the things that we teach. So I still like LOW. Now, when would I close it down? Well, right now we had the market pulling back the last few days. You can see that the S&P 500 is right above the 100-day moving average. So let's go in and let's do some market analysis. We'll get our bearings. But with regards to low, given how well, given how well low held up today, yesterday, I feel that we owe it to the stock to let the market test this 100-day moving average. If the S&P 500 cracks through this 100-day moving average, there's a good chance that low is also going to start to break down, in which case I will buy the spread back. I've got a video on how to leg out of bullish put spreads. In essence, you need to have that technical breakdown in the market. You need to have that technical breakdown in the stock. And then on a day trading basis, you're waiting for weakness to line up in both at the same time. So you want to see the stock weak relative to the market, and you want to see technical breakdowns in the market. When you have both of those, you can buy back your short strike price on that bullish put spread, let the long put run, and then exit that, perhaps even for a gain or for a scratch. But you're going to have decent downward momentum in it because the stock is breaking through technical support and the market is breaking through technical support. So I like low. You may have to manage that position if the market does more than just a little mini pullback and this becomes something more substantial. You might have to reel that in. APP, if you put both positions on, provided you with some fantastic profits and a decent hedge on the position as well. So I'm going to be focusing on the short side today, and I want to talk about how to enter a day trade, a bearish day trade in this instance. So let's take a look at the market first. We had this 12% run up in about a month's period of time, and we were smacked down from that 200-day moving average. That was a warning sign that we spotted last week. Then the next day, the FOMC minutes were released. The market rallied up. It filled this gap right in here and closed well below that high. That was also not a good sign. The next day, we weren't able to get anywhere close to the previous day's high or that 200-day moving average. Now we know that some of this upward momentum is starting to wane, and then we actually had a bearish day closing on the low. We break this upward sloping trend line. Aha. Okay, so now we are in much more of a bearish environment. And then yesterday, we had this big gap down and we closed on the low of the day. It's very important. So before you enter a day trade, you've got to get your longer term market perspective. Where most people lose sight of their trading is they're not watching the market. They don't know what the market backdrop is. So instead of looking at as I'm going to be day trading this stock, you should be looking at it as I'm going to be day trading the S&P 500, but instead of day trading the S&P 500, I'm going to find a faster horse. I'm going to find a better stock, a more reliable stock than the S&P 500. And we do that by finding relative weakness and technical breakdowns. So that's what we're going to be doing, but that's the mindset that we have to have. So you're always watching the market. That is your primary indicator for when you should be taking your day trades. In this particular instance, I've already seen that Friday we had a nice breakdown and that we're through this horizontal support level on the opening Monday, yesterday. So when I come in to the trading day, we'll go into the 5-minute chart, we had this big gap down. We also had this monster 10P spike. This is a proprietary indicator that we use to help us time entry and exit for the S&P 500 and for individual stocks. When we get this massive rally and we see no rally in the S&P 500, that's a bearish sign. We get this big gap down. We are through an upward sloping trend line and that horizontal D1 line that I showed you. Aha, we start the day with a long red candle closing on its low, and then we have our bearish 10P cross. So the market sells off. These are tiny little bodied candles in here. So if you are a novice trader or you really need to let time elapse before you feel comfortable taking a trade, that's okay. A lot of people rush in. They don't have the confidence to take the trade. You get a little head fake down and then whoosh, you get maybe a couple of bars up and you get shaken out of your position for a loss. I typically don't like trading in the first 30 to 45 minutes. That's my time to evaluate. There are gap and go markets that come up where you have to take a position immediately. I felt pretty confident yesterday that this was going to be a gap and go, so I didn't have those hesitations or that reservation. But let's say that you did. So you're sitting back, you're waiting, you're going to evaluate the price action, and you see, okay, here we go. Yep, new low of the day. Um, yeah, yep, this is a bearish trend day. And we know that from the D1 chart, and now we have confirmation on the M5 chart. Well, your mindset right now, as far as the market, should be, Pete, this is a bearish trend day. I do not need to get cute trying to buy stocks and trying to buy bounces in the market. That's not what I need to be doing on a bearish trend day, because you start thinking, here we go, here we go. Oh, this is a nice little bounce. Oh, yeah, yeah, yeah. We could go all the way up into here and fill the gap. Uh-uh, not yesterday, because we saw there was major technical damage being done on a daily chart. So that should not be our mindset. Our mindset should be, okay, well, let's see what this bounce brings us. Let's see how high the market can bounce. But my mentality throughout the course of the day is I need to short. I am looking for shorting opportunities only, because here's what happens to novice traders is they go, oh, this looks so good. Yeah, we're going to bounce. We're going to bounce. So they start nibbling on some longs here, only to find out that the selling pressure was much heavier than they thought. And then ka-chunk, ka-chunk. Oops. Guess I messed up that trade. Your mentality needs to be wait for a decent bounce, evaluate the bounce, see how high that bounce takes us. Because the longer the bounce, the higher the magnitude of that bounce, the more likely we are to establish support at the low of the day. But if the market can't even get back to the high of the day, if the market can't even fill in any of this gap, all this time in here, back of your mind, yep, this is a bearish trend day. Yep, this is a bearish trend day. Ooh, look at that long red candle right there. A first warning sign. Look at how wimpy this rally is. Tiny, tiny, tiny body candles. What does that tell you? Sellers are still there playing whack-a-mole, whack-a-mole, whack-a-mole. Can't get off the deck. Okay, so upward sloping trend line, breach to the downside. Is one red candle enough to get me short? It could be, especially if I had a bearish 1OP cross, which it had been trending lower in here. We've got another bearish cross right in here. Now all of a sudden, yes, so you can nibble. You can put on a small position knowing that this is a bearish trend day. So you're going to wait a little bit longer. Here we go. Nice long green candle. This is going to get some dip buyers excited because it's trying to get through this horizontal resistance level. And then what happens? Bearish engulfing candle. That's a sign that there's sellers. Oh, here we go. Another nice little rally to try and get back above this. Wham! By this time right here, you got a bearish 1OP cross, and you have technical confirmation that sellers are back. Okay, that is my entry point for a short on a stock. This is how I pick my day trading entry points. I'm not doing it willy-nilly. I'm waiting for the market to set up. I'm evaluating the price action to make sure that this is a bearish trend day. I didn't get any lift off of the market, so sellers are nearby. Now I start searching and searching for stocks that have relative strength and a breakdown. And I don't want you to think that this is all just a bunch of nonsense and that I'm pulling this out of a hat. These are actually comments that I posted in the chat room yesterday. And while all of this was happening, we had lots of members who were going through looking for opportunities. So I'm going to put up my chat room And you can see these are all the trades that people did during the course of the day. In fact, if you want to go in and take a look at all the trades that we did yesterday in the chat room, you're able to do that on the home page of our website. You don't even have to register. You can just go in and take a look at all of our previous day's trades and all of our comments. You are going to be impressed. Got fantastic traders in the chat room. I'm going to prove it to you. So here's my comment at 11:13. So don't really have 1OP guiding us because it's flatlining, but this is the sentence you need to focus on. If you have a stock that's a good short and it bounced with mixed candles, that's telling you that the bounce is not that strong and it's been weak before the last bar, it might be ripe for shorting. Look at this timestamp. This is 11:13, so this is less than 3 hours into trading. And, well, let me show you one more thing here. Super Pants, short Intel again. So we're going to take a look at that because I complimented him right here. That is an excellent short. So he is a member in the chat room. And let's take a look. It was right on this red bar is where I said, hey, listen, if you had a stock that was already leaking oil down, down, down. Before that red bar, when the market was still compressing and trying to move higher, that is relative weakness. You might want to start putting a position on here because all morning I'd been saying, focus on the short side, be patient. If you didn't trade this move, it's okay. You're going to get another opportunity. So let's go in and let's take a look at Intel and see how that trade set up. First of all, you have a bearish flag. So there's your flagpole right there. You have an upward sloping trend line here, breach to the downside. Now you have a long red candle with a gap down, and you've also taken out horizontal support. You go into the 5-minute chart. Whoa, look at that weakness. So where does this candle come into play? Right about here at the 1205 bar. 1205 bar puts us right in about here. So now you have the market lining up for an excellent short. You've run your searches, you've looked for relative weakness. Let's put up the 1OSI indicator. What has the market done to this point? It sold off hard and then it kind of flatlined and drifted higher. What did the stock do during that time? Tick, 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 lower. It can't find a bid. There are no buyers, plenty of sellers. Every time it tries to poke its head up, wham, poke its head up, wham, wham, wham. That is what we want to see because that tells us that institutions don't care that there was a little market rally. They want to get the heck out of Intel. And that is our tell. And that is the system that we trade. So now you have the market lining up. You've got the fastest horse in the race in Intel, and you start shorting here. That is how you enter a day trade. That is how you get your probability, your win rate above 75%. And so you don't come in and willy-nilly just start trying to take positions. You're evaluating the market, you're gauging the longer term market technicals, you're waiting for that opportunity to set up on a 5-minute basis. You're looking for stocks that have that weakness, and then you enter your trade when everything lines up. Day trading is like a lock. You have to wait for all of the tumblers to line up, and then the opportunity presents itself. If you're not patient and you're in there racing around with your head cut off, you're going to lose money. When you wait for all the tumblers to line up, you can take that position with confidence. So you know you're going to have the market tailwind in your favor because you've been patient and you're picking a stock that's already shown you that institutions are in there selling it. That is how you enter a day trade. So let's go take a look at some picks. let me tell you a little bit about what I see happening in the market right now. So we've got this heavy selling that we've seen in the S&P 500. We've got a technical breakdown of this upward sloping trend line. We have that horizontal trend line breach that I had mentioned. Are we going to see another day of heavy selling? Well, I'll tell you that today we are not likely to see a sustained rally until the bid is tested. I believe the futures are going to open about 2 points higher today. Very flat open. So in the early going today, we're probably going to see some back and forth. They're going to try and rally the market. I'm going to be waiting to see if they get a decent bounce today out of the market after a couple of days of heavy selling. Here's what I'd like to see. I would like to see a bounce that has lots of mixed overlapping candles. So let's go into a 5-minute chart and I'll see if I can find an instance here, maybe a few days ago. And let's get this major moving averages off of here so that we can get a clean shot at it. But what I'm going to be looking for is a wimpy bounce. Okay, so this would be a wimpy bounce in here because you've got lots of mixed overlapping candles, and this tells me that we're going lower. What might a wimpy bounce look like on the open today? It could look, let's suppose that this is a gap down or a flat open. Let's just say this is a flat open. That would probably be better. Flat open just like today. There's your opening price. And then we come in and we start seeing all of these mixed overlapping candles. And now we start seeing something like this. It's tails under body, nothing real strong, trying to get higher. This type of bounce today on the open would play into our favor. Why? Because we've seen the technical damage on a D1 basis. We know that sellers are present. We know that yesterday we might have gotten a little bit overextended like this on the downside, and that there's going to be an attempt to come in and try and buy the market. And so when you see these overlapping candles, these are telling you that there is still selling pressure in there. And when this starts to falter, which it didn't really falter so much right in here, but up in here, you start seeing these tiny bodied candles, tails above body. You get a bearish engulfing candle right here. These are the tells that I'm going to be looking for, along with a bearish 1OP cross. When I get this, in the back of my mind, I'm telling myself, sellers have been in the marketplace for the last few days. They are not just going to go away. They will be back. My best scenario today as a day trader will be a wimpy rally with mixed overlapping candles that just can't get going. And when I start to see that wimpy bounce run out of steam with these tiny little compressed candles, with these bearish engulfing candles in here, could be a lower high double top. It could be a double top. Bear hammer, bear engulf, bearish 1OP cross, checkbox, 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 checkbox. Okay, I've got everything I need setting up right now for a really decent bearish trade. So now I have to find the best stock. So I'm going to go through. I'm going to find a stock that I like on the short side today. That's where I'm going to be focusing. That's the mindset. That's how these trades need to set up. You've got to run through your scenario analysis. Somewhat like playing chess, I am trying to evaluate constantly what my opponent is doing. I don't just look at what he moved recently and then start my analysis. I'm looking at every move that he's made to this point because it helps me identify his game plan. And when I understand his game plan, then it tells me which moves he's most likely to make. And then it tells me how I am going to counter and exactly what I'm looking for. So all of this price action in here, all the price action on the daily chart, it's setting the table for me and I know what I'm looking for. And now when I start to see it, I'm getting excited because I know my trade is setting up. And while this is all unfolding, I'm searching, I'm searching, I'm searching, I'm searching for stocks, I'm setting alerts so that when those price points break down, I'm alerted and I start getting pop-up alerts, and they're going to oftentimes coincide with this market pullback. So that's how we do it. So let's go through and see if we can find some stocks that might set up well for a day trade today, a short day trade. One that I think is going to set up pretty well, got to be a little bit careful with this, is ZM announced earnings after the close yesterday. You could see this breakdown right here. That is a breakdown through horizontal support. There's a beautiful upward sloping trend line here that's been breached. You can see the stock has been repelled by these major moving averages and is trading below it. I think ZM could be a good swing short where you can sell some out of the money call credit spreads above this horizontal resistance level at about the 97.50 level. So if you get a little bit of a bounce, option implied volatility should still be relatively high today. Selling the 97.50 call, buying a 100 call, doing that for a credit of 50 cents or so. I think that sets up to be a pretty decent trade. Like this weakness in here, I believe it's going to challenge the low, but with the market kind of chopping around, I don't see a lot of direction in the market. We're going to get a little bit of a pullback because we've got lots of nervousness. We have the Fed in recess. We have politicians gone from DC. The market tends to get very nervous. Now we're starting to hear that maybe there's a 75 basis point rate hike that could be happening in September. These are the kinds of things that you hear about, by the way, in August when nobody's around. You probably hear something like, oh my God, it looks like we're going to go to war with China. Just crazy stuff like this. The market gets nervous in August and September when nobody is minding the shop. So yes, we could see a little bit of a pullback in the market. Overall, I did like this market rally in here. I think that we're going to set up. This is very, very nice. It came on light volume. This is coming on light volume. I believe that this rally here, this really big rally, preserves the low of the year for us. So any kind of pullback and eventual support is going to set us up for bullish put spreads. So I'm not overly bearish right now. I think that we're going to continue to come down and we're going to continue to find that bid. And that's why I like selling out of the money call credit spreads. This particular stock, I think there's going to be a shorting opportunity in it. I would not short the open. You're going to get a big reaction down. I would wait to see how the stock performs. So, in any event, yes, I think ZM could be a good one. It's a post earnings play. Watch for that continued relative weakness. Watch for that continued selling when the market does try and bounce, and that will help you enter that trade. I'm going to go into custom search. I'm going to pop that up, and I'm going to show you some variables that I'm using. So, what has the market done recently? It's rallied. What am I going to be looking for? I'm going to be looking for a stock that has been able to break down below an upward sloping trend line, just like the market. Well, show those to me. I want to see them. So I'm going to be using algo line new on a D1 basis. That means that the stock has been in an uptrend and it's recently breached that uptrend. I want to see relative weakness on a 2-hour, 4-hour daily basis. I want to see a trade signal that's new because I want to get on board when the move is just starting to set up. Also look for a stock that was below the prior day low. Well, hey, Monday was a very weak market day. So yes, of course, the stock should have been below the prior day low. Also, stock below the 20-day low. That tells me that it's got some temporary weakness. Option liquidity. I want to have some decent option liquidity so that I might consider trading options. These are the stocks that came up, and we can click through these. I'm going to click through each one of these, but there's one that I like in particular, and that's how we're going to conclude today's video. AMC, too choppy for me. Nasty breach of the upward sloping trend line here. Not going to touch it. BYND, there's your earnings right there. Get a big reaction to it. Bearish hammer. Continued selling. Now we're through the major moving averages. Upward sloping trend line. Breach to the downside through that 50-day moving average. Yeah, BYND. This could set up for a nice short in here. I like it. So it has all the ingredients I would be looking for. DNUT, too choppy. There's a nice upward sloping trend line right there. Breach to the downside below the 50-day moving average. Still some room down here to the low. Kind of a choppy, chunky stock. And it's only an $8 stock, so not my favorite. MRNA, upward sloping trend line. Breach to the downside through the major moving averages. This is a nice short. This is a really decent looking short as well. I think it's still got more downside. So kind of clicking on all cylinders here because we're finding some nice candidates with this search. Right there, upward sloping trend line, breach to the downside, can't get through that 100-day moving average, been weak relative to the market before the market started to even roll over down through this 50-day moving average. Plenty of room to the downside, cheap little $5 stock, but yeah, NKLA, that's another decent looking pick. This is a little bit on the choppy side, SPCE, but you've got your upward sloping trend line, breach to the downside. These trend line breaches are very powerful. And finally, Z, upward sloping trend line, and this is one that I like. Upward sloping trend line, breach to the downside, through the 50-day moving average, continuing to leak oil, plenty of room on the downside, weak relative to the market. Z is going to be my short pick of the day. I would get pretty aggressive with this. It's a choppy stock. So when I trade stocks or options, I like to go back and see what the heck the daily price action is like. And in this case, it's choppy. It's back and forth. You should always do this. You should see if you've got stocks that are chopping all around the place. They're up, they're down, herky, jerky, price action like this. This type of move and this type of retracement tells you that this stock moves and that you should not be shorting when you're making a new low of the day because you're probably going to get squeezed. Aha, there's the bounce. Upward sloping trend line. Okay, stock starting to roll back over. Now it's below the 1OSI indicator or relative strength indicator is below zero, not to be confused with RSI. We're talking and comparing how the stock is performing relative to the market. So here, the stock is weak relative to the market, upward sloping trend line. We know that's in a downtrend. We're waiting for this bounce to peter out. That's our entry point right there. See you later. Our entry point is not here because of the character of the stock. So, with regards to letter Z, Zillow, I also believe that you can sell an out of the money bearish call spread. And the strike price that we would want to use for that is $35 because that puts us above the 50-day moving average. We've got that breakdown. Stock should continue to drift lower. I like selling that 35, 36 bearish call spread using the September 2nd expiration and doing that for a 20-cent credit. My stop on that would be a rally above that $35 50-day moving average. That's how I would play it. So yes, I think Zillow is going to continue to decline, and it's got plenty of room on the downside. If you didn't want to do a swing trade on it and you just wanted to day trade the stock, if you get a big pullback on the open, you've got to wait for the bounce. Once that bounce starts to stall out and you get that relative weakness, that's your entry point for the short. I know this video is getting pretty long, so let's do a quick recap. How do I know when to enter a day trade? Everything starts with the market. Market first, market first, market first. I have all the tells right now that tell me that right now we have a upward sloping trend line breached, horizontal was support, was resistance, now it's support, that's been breached. So we are expecting the market to continue to go down. You go into the 5-minute chart, you evaluate the early price action. The price action today is telling me that after a big day of selling like this, we're probably at some point going to see a little bit of a bounce early in the day. That is our best case scenario because I don't think it's going to gain any momentum. We're going to be waiting for those compressed candles. We're going to be waiting for bearish engulfing candles. We're going to be waiting for bearish hammers, double tops. When we start to see that early in the day, that's our best case scenario. Then we're going to be going in and we're going to be taking a look at stocks like BYND and Zillow. We're going to be watching for that relative weakness, and we're watching for this 10 SI indicator to be below zero. We'll wait for that bounce to stall, and then we'll be looking for our short entry point. That's how we day trade. Thanks so much for watching, everyone. I hope this helps you to time your entry for day trades. We'll see you in a few days. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.